Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. We're in interesting times as always.
Gold and silver had quite a dip the last couple of days, but they're seem to be on their way back, especially gold. What's your view on it?
Yeah, it's quite interesting. I mean, of course, we had a tremendous rally in both of them in the second half of July. That rally happened after several weeks of a consolidation, kind of a pause and a really bullish uptrend. And silver and gold have both been outperforming the stock market all year, still are, even with that dip. So it's tremendous momentum. It's a, great place to invest and buy, and the best time to do it is when you have a dip, and that's what we got. But coming into this week, I was kind of suspecting there would be something of a dip. It did fall more than I thought, but what I was looking at was the Commitment of Traders report, because it was showing that the commercial producers and hedgers had reduced both long and short positions, and they tend to be correct. And that made me think, well, they're not getting extremely bullish because they're selling some of their longs in the futures market, but they're also not getting very bearish because they closed out some of their shorts. That made me think that they're expecting or were a sideways consolidation to work off the overbought level that we have in or got to in silver and gold because of the huge run up, a breather, so to speak. And to me, that would represent something like a 5% dip in the price of gold. But we went farther than that overnight. Last night, gold went down all the way to 1866. It's really a 200-point drop from the high. Silver had a similar drop, but now as we're speaking, they've come back up, trading around 1940 or so. So my expectation is still that we'll have some sort of sideways consolidation for several weeks, similar to what happened in May or June when gold was around 1750. So I'm not really looking at any more meaningful downside in mining stocks. Yeah, the GDX could fall again and hit the 50-day moving average or something, but to me that's really no big deal. And I think this is the time to use to figure out if you aren't invested and you have been wanting to get in. Now is the time. If you already are and you want to buy a little more, I think now's the time to start to consider that. Look up the type of mining stocks you might want to get into. Go to places like HowStreet.com or my site, or better yet, both, and start doing some research. Or there's other experts out there, people on your show, and so forth. So to me, this is a breather. This is a time in the metals market to do your research and figure out what you want to buy next.
So this is a time to be picky. Not all gold juniors or gold miners are created equally.
Yeah, and I would say so. I mean, the thing is, if people want to buy everything, they tend to buy like the GDX ETF. But the thing is, you can beat the performance of these ETFs if you just buy the stocks in them, because then you're not charged a management fee, and then you get bigger dividends. And now with commissions at zero, you're not saving money by just buying the ETF. But then if you start thinking, well, I'm going to buy the stocks, then it might as well be picky and not buy the ones that aren't that good. And with the junior market, I do think, generally speaking, they're all going to go up over the next couple of years, but the best of them will go up a lot more. I mean, I think before it's over with, almost every single junior mining stock will have a market cap of 25 million, because that's typically where they get to when you have a bull market, but the best ones will go up much more than that. So, that's the great opportunity that we have in these markets right now.
It's been pointed out that there haven't been any really big new gold discoveries for quite some time. And if the price of gold keeps going up for it, demand will outstrip supply, and that will, in theory, boost prices even more, won't it?
Yeah, that's right. And a reason for that is the big bear market from 2012 to the low of 2016. Yeah, that's 4 years, and mining stocks fell 90%, just really devastated the industry, and the big companies cut their exploration budgets, and many small companies stopped functioning or went under. So you basically had a collapse of people drilling and looking for discoveries for years, and it's going to take, time for the next big discovery to be found. So that's sort of an interesting moment or spot we are in the cycle, and probably one reason that helps the gold and silver continue to go higher as time goes on here.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mike Swanson. Mike, what's the latest with Tesla?
Well, it's one of the craziest stocks I've ever seen. They've just announced they're going to do a 5-to-1 stock split. I guess Musk saw Apple do it, so he's going to do it too. But it's really a story stock. I mean, the company still loses money. It's got billions of dollars in debt. And there's a lot of comparisons been made to other car companies that have gone bust. But, it's an interesting thing because I was just talking with someone on the phone about it, and they're like, when's it ever going to go under? And the way everything is at the moment, I said, I don't know, because, look at the corporate bond market. Interest rates just hit a record low yield for corporate junk bonds. That helps companies like Tesla survive. And this is all happening thanks to all the Federal Reserve bond buying that was announced in March. And we're heading to a moment where the Fed is actually going to come out and say that we want to keep rates low and let inflation get above 2%. They're going to abandon their dual mandate of keeping inflation low in September. And supposedly the argument that this is what we need to do to grow the economy. But I think it's really to grow the debts away with inflation over time is their hope. But this is, helping these companies stay alive. 20% of American corporations are so-called zombie companies, meaning that all they can do is finance their debt with their revenue. They have so much debt that they can't innovate, they can't really expand, they can only, pay their creditors with any ounce of revenue they got. So that's putting us in a weaker competitive position in regards to the rest of the world. And we're creating a culture of oligarchs in the United States, of these rulers. You know, Amazon is an example of that, where we shut down the U.S. economy, making it, in April and May, making it illegal for many businesses to stay open, except Amazon and Walmart, that then, stole business and, operated the way they do. And Bezos becomes one of the richest people in the world. Amazon becomes one of the best stocks in the world, whereas many small businesses suffer. And so you're creating this oligarchy, and Elon Musk is also a leading oligarch. I mean, this is a guy that, his Solar City was about to go bankrupt, and he rolled it into Tesla, and there's a lot of Tesla critics who look at it and attack it and have lots of arguments. But in the end, Elon Musk also has this SpaceX, which is making money with government contracts. So he's directly tied into the defense industry, and even if Tesla went bankrupt, he's not going to go bankrupt. So this is kind of the class of rulers we now have created in this strange economy that we're now in, where, the Federal Reserve has rates at zero, buys corporate bonds, using the government action to prop up companies. And, when you have that, you have corruption, you have oligarchs, and it's a strange moment. But, the average American in the stock market is so far benefiting from it because the stock market has still been going up. So they're not going to complain that much.
Now, I know the Fed has said it's not going to raise interest rates, at least until the end of the year. Any sign that they would raise interest rates after that?
Well, I think it's going to be a really long time. I mean, something would have to dramatically change, because in their projections for the U.S. economy that they've given in the last two meetings, they're claiming that we will bounce back somewhat by the end of this year. Growth will still be down, like negative 6% for the GDP. But after that, they're just projecting like 2% GDP growth for the next 2 or 3 years, which is very sluggish growth. And they've stated, so the growth won't be big enough for them to raise rates. And then they're stating that they'd like to see inflation grow, for several years. So I think, if you take what they say, they're not planning on raising rates for years from now. And the problem is, if they do start raising rates, then a lot of businesses would go bankrupt overnight because they're not going to be able to keep getting these low rates from the corporate bond market. And, and then the U.S. government deficit would be harder to fund. So I think they're kind of frozen. In reality, I don't think they can raise rates that much. And their only choice is to try to inflate away the giant debts that the U.S. government now has.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, is anything going on with Bitcoin right now?
Well, it's still, in my view, just trading with the NASDAQ, except in a more volatile fashion. I've never seen it, people that like Bitcoin claim it's going to replace the US dollar, and they claim it's a safe haven, but the correlation between Bitcoin and the US dollar, there is no real relationship there statistically. You can run a correlation indicator and see that, whereas gold has a negative 0.9 correlation with the US dollar, meaning, it goes almost completely opposite to the US dollar. The Bitcoin correlation is completely random. But what Bitcoin is closely correlated to is the NASDAQ. So to me, it just trades more volatile than the U.S. stock market, but with the U.S. stock market. And that relationship has never changed. So, we saw Bitcoin completely crash in March when gold only pulled back 10%, and then Bitcoin went up with the market. But to me, it's much more risky than the U.S. stock market because when the market does fall, Bitcoin completely crashes, and then when it goes up, you don't get dividends. It's just a weird, sort of like an option or something. So I don't really want nothing to do with it myself. I mean, I like to invest in things that pay dividends if they're stocks, and then I want to be diversified. And to me, bonds no longer function as a diversification vehicle because they pay such little interest. I mean, you can't even get 0.75% on a 10-year treasury bond. It's crazy. But Bitcoin isn't diversification either because it just trades in the stock market, whereas gold now is functioning as a diversification vehicle. It fell less than the stock market in March. It's come back better than the U.S. stock market, and silver the same way. So for me, it doesn't provide any great reason to invest in it. It's just a speculative vehicle, and if someone out there is able to time the Bitcoins and trade it, well, that's good for them. But as a long-term investment, it just doesn't really make much sense to me.
Mike, you were one of the first people to report on what people now refer to as Robinhooders, the millennials staying at home, collecting government benefits, the betting on the stock market like they're betting on sports and so on. What's the latest there?
Well, and unfortunately, it's been a fascinating thing to track this because Robinhood has, inside its app, had a thing where it would show you how many people own an individual stock or ETF. So you could type it in and see, and then it would provide a list of the most 100 owned things and tell you the exact number of people own them. And the last I looked, there wasn't a single gold stock, silver stock, mining ETF, or metals ETF in that top 100 list. Whereas in the past, there had been like cannabis stocks on the list, last year at the top, Aurora Cannabis. So that told me, look, the small person with these accounts isn't in gold, and that would mean that we're still way early in the game. I still think that's the case. The unfortunate thing is there's been so many stories, like in the Wall Street Journal, New York Times, and in CNBC, even Kramer talking about Robinhood people in a negative manner, mocking them, in reporting bad stories about him. Like, there's a Robinhood trader who's like 18 years old, and he opened up his app and it said he lost $750,000 when he only had put in a couple $100,000 in it, and he killed himself. And it turned out that he actually didn't lose the money. It was just clearing some options trades he had done, and he mistakenly thought he lost a fortune when he didn't, and he killed himself. And it was a tragedy, and it was a terrible story. And Robinhood has now stopped reporting how many people own these positions and stuff, because I think they were believing it was giving the negative publicity. So sadly or unfortunately, I won't be able to look at that anymore and tell you about it, because it was an interesting thing to track. So they're kind of covering their tracks, and don't want, so many bad stories anymore.
Mike, if you had to sum things up and what a strategy could be, what would it be?
Well, be well diversified. Gold, silver provides that. Mining stocks increases or goes up more than gold and silver when they go up, and juniors go up even more than big cap mining stocks. But don't only do that, buy other sectors. If you ever get 100% invested in one single thing, then when there's a correction, it's easy to sell out or get scared. And probably some people have done that on this recent correction that we've just had. So if you're 100% invested and there's a correction, it's easy to get shaken out. If you're not, it's easy to buy a little more or add on and so forth. So, look at energy, look at other commodities, look at foreign markets, and there's other things to do. And one thing I got my eye on are several foreign currencies. The euro, for instance, and the Swiss franc, the Japanese yen, a lot of them have this pattern where they've been in a trading range for several years and look like they're going to break out of it, into what I would define as a stage 2 bull market. They've been, have resistance for 4 years, such as the Swiss franc, and they are trading right under it. They look like these currencies look like they can have big turning points, breakouts, say by the end of September. That'd be extremely bullish for gold, but it's the most interesting thing I'm looking at right now. I think it would be a sign that the U.S. dollar is going to continue lower with ramifications of inflation and more commodities going up, and some of these foreign markets outperforming the U.S. stock market. So that's something I'm eyeing now as an investment opportunity or trading opportunity to develop over the next couple weeks. So we guess we can talk about that as things unfold in the next interviews we do.
Mike, thank you so much for chatting with us.
Oh, great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or anybody else on our show, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.